The credit union movement in this country began in 1934 when Congress created the National Credit Union Administration. This federal agency provided the structure and framework under which credit unions would operate. Less than 3 years later, 10 employees of the fledgling Eastern Airlines affixed their signatures on a charter creating Eastern Airlines Employees Credit Union. This small organization was founded on the basic credit union philosophy of individuals pooling their financial resources for mutual benefit, not for profit. As Eastern Airlines Employees Credit Union grew and prospered, other companies and organizations were added to the charter. To better reflect the diverse memberships of more than 1,200 member companies, the credit union changed its name to Eastern Financial Florida Credit Union. A traditional sound conservative management has allowed Eastern Financial to thrive for more than half a century and even survive the demise of its Eastern Airlines, its original sponsor.
Eastern Financial Florida Credit Union, formerly known as Eastern Airlines Employees Credit Union, was originally founded in 1937 by employees of Eastern Airlines. After several years of operating solely for employees of Eastern Airlines, the credit union began accepting other companies and organizations. As a result, their common bond membership was expanding, and then changed the name to Eastern Financial Florida Credit Union. The credit union is state chartered and regulated by the National Credit Union Administration and federally insured through the National Credit Union Share Insurance Fund. Eastern Financial Florida Credit Union is one of the largest credit unions in South Florida, with 30 branches throughout the state. These branches are located throughout Miami-Dade, Broward, Palm Beach, Pinellas, Hillsborough, and Duval counties. In 2002, the credit union changed its charter to anyone living or working in any of these counties where there is a location. Due to these membership expansions, the credit union is amongst the 35 largest in the nation, with $1.6 billion in total assets. More recent, Eastern Financial Credit Union has been crippled by bad loans and messing around with exotic securities. According to the South Florida Biz Journals, on March 19, the Office of Financial Regulation issued a cease and desist order against Eastern Financial that cited it for 15 violations of financial institution operating laws. Also ordered the credit union to file a plan to improve its lagging net worth to asset ratio. Following that, the credit union's first quarter financial results showed a $4.5 million operating loss and a 2% net worth to asset ratio. Following the tremendous losses, on April 24, 2009, the Florida Office of Financial Regulation appointed the NCUA as a conservator of placing Eastern Financial in a conservatorship. The NCUA assumed control of the credit union and appointed officials of Space Coast Credit Union to temporarily oversee the credit union's day-to-day activities. Space Coast Credit Union filed an intent to merge with Eastern Financial, which is still in the process. None of the customers of the credit union have suffered any financial losses as a result of these current events, and their regular banking activities remain unchanged. On the positive note, the merger with Space Coast Credit Union will make it the third largest credit union in Florida, grow their assets to over $3 billion, 66 branches throughout the state, and 151 ATMs to serve its customers.
I'm going to be discussing some of the Eastern Financial Florida Credit Union ratios. The report used in this analysis can be obtained from the National Credit Union Administration's website, and it covers the 4-year period of 2005 to 2008. After analyzing the financial performance report, it can be concluded that most of Eastern Financial's profitability ratios have declined in the last 3 years. One of the primary ratios to evaluate the performance of a credit union is the return on average assets. And Eastern Financial's return on average assets has deteriorated and is lower than its peer group average. Moreover, its net worth to asset ratio has also declined substantially from 10.62 in 2005 to 2.25 in 2008. In comparison to the 10.74 peer group averages, this is an unfavorable trend. As of December of 2006, around 70% of credit union assets were invested in loans. Therefore, since loans are an important component of a credit union assets, We can analyze its loans ratios to determine how well the company has been managing these assets. Eastern Financial Florida Credit Union loans to total assets ratio has increased, which is unfavorable since the greater the loans to assets, the greater the risk of default, especially in economic slowdown. We can also see that the delinquent loans to total loans ratio has increased. This is an unfavorable trend and could be in part attributed to the increase in the loans to total assets. Moreover, it could also be inferred that the decrease in return on assets could be in part attributed to the increase in delinquent loans. The provision for loan and lease losses has also increased in the last 3 years, and it is substantially higher than its peer group average. This trend is unfavorable, since this represents that the company is expecting higher loan defaults, which in turn can further deteriorate profitability. Other ratios such as the net worth growth, market share growth, loan growth, and asset growth have also deteriorated in this 4-year period and are lower than the industry average. However, some of the positive indicators for Eastern Financial include the yield on average investments, which has increased in the last 4 years and is higher than its peer group average. Furthermore, even though Eastern Financial Florida Credit Union's investment growth has fluctuated in this 4-year period, it's substantially above the industry average. Other positive ratios include the gross income to assets ratio and the net margin to assets ratio. Both have shown an improving trend and are more favorable than the industry average.